With all the business news, here's Ben Thompson.
Thanks, Geeta. Yes, all eyes are on the United States once again for the head of the central bank there and his efforts to try and tame rising prices. It's a problem around the world, but particularly in the US right now, the world's largest economy. Jerome Powell has been speaking on Capitol Hill for a second day, this time to the House Financial Services Committee. Yesterday, his testimony was enough to move markets. They fell pretty sharply on the prospect of a bigger rate rise than had been forecast. Well, let's find out what he said. We can speak to Samira Hussain, who's in New York for us. And Samira, we talked about this yesterday, about what to expect, and markets didn't like what they heard, did they?
No, absolutely not. I mean, basically what Jerome Powell said was that, look, if you look at the economic data that's coming in, although some of the rate of inflation seems to be cooling somewhat, we're still seeing a really robust labor market. And as a result, they need to be more aggressive in terms of their monetary policy. And what does that mean? Well, it means they're going to be raising rates, and they're going to be doing so aggressively. And they're going to do that for longer than initially anticipated, all in an effort to try and cool down the economy and bring those prices lower. But it does make a lot of borrowing much more expensive.
Yeah, and that's what a lot of businesses will be worried about, isn't it? Because they rely on that borrowing. They've had it so cheap for so long. They've had it so good for so long. And the idea that that cost of borrowing is going up and it could stay up for a while is ringing alarm bells.
It's certainly ringing alarm bells for corporations, for businesses who have been, as you rightly pointed out, in an era in which, money was pretty cheap to come by. The other thing that's really interesting, and it's, we saw that Jerome Powell faced a lot of questions from lawmakers, both Republicans and Democrats, about this one issue in terms of what is the data that they need to see for them to stop these rate hikes? And the reality is they need to see some cooling in the labor market. And what does that actually mean? It means they need to see people starting to lose their job. That's an even more difficult message for people to hear, and that too for lawmakers to hear and deliver back to their constituents.
Yeah, absolutely. There's so much that they're all trying to juggle right now. Central banks around the world, big job ahead of them. Samira, good to talk to you. Thanks very much. Samira Hussain there live in New York for us. Now, it is an unlikely place for a technological breakthrough, but the sea off Denmark could revolutionise the way that we think about our carbon emissions. It is called Project Greensand, and it is the world's first international CO2 storage facility that is designed to store greenhouse gases by injecting them into the soil under the North Sea. Well, the project was launched today by the Crown Prince of Denmark, but eventually it aims to permanently store 8 million tonnes of the stuff by the year 2030. So how does all of it work? Let's speak to Iggy Bessie, who is the Chief Executive of climate intelligence platform Servest. Iggy, good to talk to you. Explain a little bit. I've sort of touched on it there. The idea is you take all of this CO2 out of the atmosphere and put it underground. Just explain it slightly more in detail for us, if you will.
Yeah, so CO2 can be captured in a number of ways. What this project proposes to do is to capture the CO2 at source, which could be like power plants. It could be other facilities where you're sort of generating assets or things like refinery. That CO2 is then liquefied and then transported and then embedded into the seabed over time, with the hope that it can stay there long term. And it's a fairly permanent source of storage for carbon long term. So it's very complicated, it's very expensive, but it's welcome news today, because I think we need to be thinking about these engineered solutions alongside nature-based solutions as well.
Yeah, you say it's complicated, you say it's expensive. It's also energy intensive, isn't it? And I wonder, actually, is it really the solution that we might think it is?
I think it's one solution. I think it's one of many solutions. I think we need to be open to a mix of solutions. So just to put it into context, I think today's proposal proposes something like 8 or 9 million tons by 2030. Last year, roughly, we took about 50 million tons of carbon through what they call carbon capture and storage. But we need to be talking about 1.2, 1.7 billion tons of metric tons by 2030. So Today's welcome news, but put it into context, it's 8 million tons. We need to be moving towards about 1.7 to 2 billion tons by 2030. So a huge way to go. But also, I would also caution against this sort of growing carbon tunnel vision. Carbon is part of the solution, but we're also living in physical hazards. We have transition risk. Also, we have biodiversity losses. So there's multiple strains of sort of problems that we are tackling. So all news is welcome, but we do need to think about mitigation and adaptation at the same time.
Yeah, that's what I wanted to ask, actually. You know, any reduction in CO2 in the atmosphere is good news, but I suppose we're still generating too much, and therefore maybe that's the solution, isn't it? How do we stop generating it rather than just cleaning up after we've polluted?
Yeah, and that's largely what this proposal does today. It's really cleaning up the byproduct of the very carbon that they take out the ground. We're putting it back into the ground. But actually, a large part of that carbon is also used for enhanced oil recovery, which means actually that carbon can then be used to generate even more efficiently more energy capture from the ground as well. So we have to think about, you're absolutely right, we have to think about the overall reduction. The problem is that there's too much CO2 in the atmosphere. We need multiple ways to bring that down over time, not just thinking about these fossil fuel technologies over time. We have to think about renewable energy sources over time. And we don't want this to be an excuse for companies not to start generating and start thinking about renewable energy investments as well.
Yeah, it's a fascinating area, isn't it? Iggy, it's always good to talk to you. Thanks for being with us. Iggy Bassi there, Chief Executive at Servest. Some other business stories for you at this hour. The car maker Volkswagen could focus on the US for battery production. That's after the country launched new incentives worth $10 billion to attract greener technology. The move could mean it ditches a project that's planned for Eastern Europe. But nothing is finalised. According to the FT, the firm is waiting to see how European policymakers respond to those US proposals. Air travel is getting back on track. The latest figures show total traffic is up 67% compared to this time last year. The International Air Transport Association says the figures show a healthy start to 2023, driven by China's move away from its zero-COVID policy. Global traffic is now at just over 84% of pre-pandemic levels. The sportswear brand Adidas is to slash its dividend, reflecting the likelihood of its first annual loss in 3 decades. Last year, the firm parted company with rapper and fashion designer Kanye West in response to anti-Semitism accusations. You're up to date. All the headlines coming up for you at the top of the hour. See you very soon. Bye-bye.